Welcome to TradeTheMBI.com. This Jones report is for the 16th of September, and the continuation of the lower move with the MBI white leading. We've had magenta and yellow MBIs fading, but so has the white. So turnaround, not impossible at this particular stages, which would just be a stabilization, not necessarily an improvement. The recognition is exactly what we've always known, that inflation is going to continue to do what it's doing, and the Fed is not going to ease off on fighting it, as limited as their ability to do that. But that come winter, there's still going to be this supply disruptions. Of course, the aversion of the rail strike, at least temporarily, certainly helps things. But should that go forward, that would definitely be cataclysmic, because that will shut down vast portions of the economy, causing more inflation, ironically, because you would be limiting supply of certain goods that people will essentially need and will pay extra for. We're seeing short-term buyers on the DOC here with steel rising, but coupled with that, rising shorts. And we've got a huge increase, and this is an opportunity for short hedge funds, things like that, to take advantage of the lockup period that funds and or companies are limited from buying back their own shares at this particular stage, which limits liquidity and makes an ideal situation for them. Couple that with the beautiful option expiration. I mean, triple witching. It's beautiful, and that should add to our volatility. We're right at the 23% now, down 31 in pre-market. Still quite a long ways before the actual U.S. pre-market, but significant nonetheless that we're still in a continuation weakness. The shakeout obviously continuing to move lower, but more importantly is the histogram below the yellow line. It takes that moving above it in order to see some kind of turnaround. We're not below the red line, so we haven't gone into what we would describe as extreme selling. Interestingly enough, given what we've seen in these last couple of days for declines from an NQ standpoint, uh, pretty much identical. It's actually right in line with it, which we like to see because there's a consistency there. So that means any turnaround is going to be broad based and consistent. The Euro puke was the same, and it's still relatively high comparative to the understanding of, well, of course, the EU announced that they had solved all of the issues. Of course, the market is responding today, saying that's just pie in the sky dreaming. You haven't resolved anything, and if Russia decides, it could get a lot worse in Europe. And so, Euro's way overvalued, even at this particular stage, having lost 27% of its value already. Um, Sad as that is. From a gold standpoint, again, suggestion is deflationary pressures with recession guaranteed with the continued hot numbers, and so preemptively sell. Uh, but it's also part of that bifurcation because the demand on gold is still relatively high. So it's an interesting diversion from reality in that one. Oil dipping the other day, but still we're in that 85. And again, when the U.S. is talking about buying for the Strategic Petroleum Reserve around 80, you kind of got a floor sort of built in. Be surprised to see if that breaks. Or the question will be a demand one, and whether or not we see a fading of demand. I mean, we're still looking at weak readings here from a MBI as well as from a DOC standpoint. So could be testing those lows again. We'll see how resilient the market believes that purchase of filling back up the oil reserve is. I think it could be just more jawboning than anything. From a TLT standpoint, as the market fades, a little bit of purchasing into treasuries for safety. That's decreased the yield slightly, but we still expect that over continuation time to fade. No question about it, because rates are going to continue. The struggle for Bitcoin and them is moving back towards that bottom 18. Again, the more it keeps testing these bottoms, can either be a good thing, but more likely than not, you tend to break those. And like we said, break at that 18 level puts the 13 as a pretty strong possibility. And from an ETH standpoint, a lot more room before it gets there. And this shows the relative strength of Ethereum to Bitcoin relative to desire, and just the amount of different things that are working with Ethereum versus Bitcoin's limitations. And from a 50K standpoint, we can see the weakness continuing from earlier, and that's just been that clear MBI white lead. 0%. It's maintained it and still leading at this particular stage. As we continue to fade a little bit here into the 38. Intraday, fantastic. It's a little bit of pre-market while before we hit a bottom, bought that back up again. Was interesting there. That's that same red leading MBI over magenta, even though you have your crossovers, and very late before you get a DOC, and that's what happens in slow ones. The difference being is we have P2, and we recognize the P2, which is the higher pivot of the red DOC. So that becomes a strong enough signal to go ahead and make that turnaround. And then once it peaked up, we had a couple positive extremes that filled them back immediately, sent us to new lows. And that was just precursor for the build, short cover rallies. And we got quite a few of those. It's always nice here, so you can see in this one the red lead of the MBI barely gets to the 38%, red leading the whole way through, just getting to that turnaround point, and that's when magenta fades and it hits all the way back down to the 0% before it forms another P2, which gave us this rally that led to the next collapse, which brought us all the way back down. I love days like this where you just back up, back down. It's just a matter of going with the swings. And then we kept getting a repetitive sub configurations as we peaked late buys, and then pre-market right now. Sell signal was at the end of the day yesterday, and that has continued overnight, and now even in this early session making new lows as we speak. So there you have it. Volatility, volatility, volatility. That is the response. Also negative bias. So that's pretty much the existence of it going into this OPEX. So just be fluid, stay with the rolling motion of it, because I think there's going to be a lot of range on both sides. I think there's plenty of opportunity either way. It's just a matter of following which readings give you the direction you want to travel. As always, trade well. You can look for me to put up charts on Skype chat. Have a good one.